here, I think. So with some good words there, you got to know. You got to know when to take the trade, know when not to.
Yeah, that is nice one actually. I liked it.
To paraphrase,
Yeah,
anyways.
you are creative as usual.
All right, on to the trade review. So
Here, I
have a good
think.
one. I'll be listening in.
So thank you, Peter, and thank you everyone for seeing it here. Now let's start with the trade review. So how was your day, first of all, everyone? Before I start with the trade review, Peter be max loss. That's fine. Don't trade past your max loss. That's the most important thing. Positive, 5 reds in a row. Were they? You have 5 R max loss, I guess, right? Andrea mixed. His are 2 green trades. Ethan, 2 trades, 2 Rs. That's good. Randall is green. So yeah, I guess not the worst day. Red day. My day was good. I was actually almost done in the pre-market, but I had to take one more trade after the market opened because I didn't hit my goal by that moment. So I took one more trade here, and only then I was done. Down 300 at the open and made 150 back. You still going to trade? Skyfast? Mark, 1 green, 2 winners. I hope the green was big. Remember to let your winners run. Okay, that's good. If we are done early today with the trade review, we can look for opportunities together. Now let's see what we have there. Just 1 second, everyone. I need to fix this. And hide this. And get the epic pen. Remember, everyone, if you have... Why? This is not epic pen, this is epic games. Sorry about this. This is the epic pen. So remember, everyone, guys, on YouTube, here, if you have any questions, feel free to ask. Guys who are new here and are for the first time in our trade review, if you could just take a screenshot from any trade from any day, doesn't need to be from today, yesterday, before that, any day, and post it in the off-topic chat, preferably different time frames, and we will take a look on them. So Han, you took MRNA to the short side, and I like this one was really clean, and I like your stop loss right there. MRNA opened weak, did sort of reverse ABCD here, M shape right here, which I really like. Bear flag on the 15-minute chart, and here it started curling down. You have a new 5-minute low right there, and once you took it to the short side on a new 5-minute low, usually, or how I used to do it before, if I take a reverse ABCD pattern on the 5-minute chart, my stop loss should be on the 5-minute chart up here. So it would have been somewhere up here. That's how I used to do it before, but not anymore. Now we just look at the pattern on a bigger time frame, and here you could see the bigger time frame reverse ABCD pattern or 3-bar setup, exactly, Peter, on the 15-minute chart, and you decide your entry on smaller time frames. If you get your entry here on this candle, then without arguing, this should be the stop loss right here, because this is the level it bounced from. It dropped down. You can't just put your stop loss anywhere randomly on a new 1-minute high, on a new 1-minute high, or somewhere right here. You can't just do that. But here you could see that it tried to go back up. It closed as a doji, and then it started curling back down, making new 1-minute lows. So with this entry, this was more than enough for a stop loss. Should I have taken the first partial or just wait for the break? Now look, if this partial gave you at least 2 Rs, then no problem, you could take some partials. I usually wait for the breaks. If I'm patient enough, if I'm done for the day, or if I really believe that the stock will go lower, I would wait for a bigger move before taking the partial. If I'm hesitated a little bit, and this move here gave me the 2 Rs, I would take just small partial, 30%, 20%, depending on the strength of the level. And where you took the partial, it was still way above the low. Actually, not so much above those. So yeah, this wasn't a bad partial right there. But looking at it and looking at the setups, you have a 3-bar setup on the 15-minute chart, which is a weak pattern. You have a reverse MCD pattern on the 5-minute chart. You have an M shape on the 2-minute chart, which I really like for shorts. You had everything telling you that this thing most probably is going to break down. So you could have also held, yes, but this wasn't a bad partial. This partial wasn't bad as well. Those a little bit, I think you were nervous, or maybe you still had a big shear size there. But once it broke, remember that usually the stock, when it breaks down, it could pull back into the range. Here it did actually break the range, but it did close around the range. It did break it, but they usually do pull back to the previous support area, which could be a good entry. This is not the best entry right here, but this was a good entry. Again, for those who missed it. Once it broke up, pulled back, did the M shape again. You could see the M shape here again. Not this. Yeah, you could see the M shape. Why can't I get the pen? I got it. Yeah, you could see the M shape here. It's starting to curl back down. It failed the breakout once, it failed the breakout twice. It's doing a reverse ABCD pattern again, and this could have been a good entry for those who missed it. Let's see your second trade hand. And then we have Lenny. And you took SPXL for a parabolic reversal. Now this is not bad. Look at these guys. Parabolic drop, extended from the 9 moving average on the 5-minute chart right there. New 1-minute high above a daily level. No volume confirmation. No new 2-minute high, but enough. If I look at this, I will have these points. 1. Is it extended from the 9 on the 5-minute chart? Yes. 2. Do you have any daily support on the way? Yes, we have that. 3. Do we have volume spike? Unfortunately, not there yet. Do we have a good looking 2-minute candle? We have it. Do we have a new 2-minute high? We don't have it yet. Do we have a new 1-minute high? We have it. So basically, it's not the perfect setup, but still a good setup. And it was enough extended from the 9 and the 5. You took it to the long side here. Was this a hotkey mistake there, Han? Or it was an ad? Accident. Okay, that's good. And then I would just either hold it for a good risk to reward before I take my first partial, or hold it to the 9 moving average on the 5-minute chart. This again, a mistake, an accident, or this was an ad here? But this was an ad 100%, right? Okay, yeah, this is an ad. Because I could see it here on the 1-minute chart, it started forming this pullback, started coming back up. I wouldn't have added even here. Why is that? It's going straight up. Higher highs and higher lows. You are adding on the way up. That's not how we want to add. When do we add? We add after pullbacks, after fake breakdowns, or after a drop right there. This you could see a drop. You could see a new 5-minute low. People could have assumed that this right here is doing a reverse ABCD pattern. Then after this fake breakdown, it squeezes back up. Now this would have been a good entry, or this could have been a good entry for an ad. With a next partial of this horizontal moving average right there. These were mistakes. That's good. Not bad ad, but better waiting for pullbacks before the ads. But yeah, I guess those mistakes were good for him. Lenny traded beyond. Now look at this. I wouldn't have taken this thing to the long side here. And guys, anyone? Good morning, Anne. Why is this not the best place to take stock to the long side? I could see 2 reasons at least. This is after an engulfing big candle. One good reason. No new 1-minute high. I like that as well. No new 1-minute high. Was that pullback stock manipulation on the SPY? We'll get back to the SPY because I don't really remember what happened there. Engulfing red, big red candle, parabolic pullback. That's another good reason. I wanted W. That could be another good reason. Yeah, and need a confirmation against the support. The doji before the red. That's another good reason. So everything you said, guys, is true. So look at this. It went up. It did a small ascending triangle right here, and it did break out. This was a breakout, right? But it was a fake breakout. People could take this thing for a bull flag right there. I wouldn't do that, but you could do that because this was close to view up. 5-minute open range breakout on a smaller pattern, on a smaller time frame, just for a break, for a momentum play, and people take it to the long side. But look at this. This is not a decent move. This is like a really small move right there. After that fake breakout, it's doing a huge engulfing or a huge drop or red candle. this would actually get me stopped out. Why is that? It's getting back into the range, and when it's getting back into the range, it's starting to form sort of head and shoulders pattern. Even the new 1 minute high, I wouldn't take it. Why is that? Because of this head and shoulders. When you have a head and shoulders set up, you will have new highs. This is not me. This doesn't mean that it's going to blow back up right there. That's why I usually wait for a W pattern. When you have a W shape, you don't have head and shoulders. You get another confirmation or a failure of a head and shoulders setup. So yeah, this wasn't the best entry. Even this, if you took it right here, wouldn't have been enough of a confirmation. Then look what happens. It breaks the low where you get stopped out. Then you take it to the long side here. Now this long isn't bad. Why is that? You had sort of reverse ABCD pattern, sort of head and shoulders, which actually worked out. But after it dropped here, it didn't continue dropping down. It wasn't weak enough. It broke this necklace right here, or neckline. And after the break, it didn't get sold off, got back into the range. So you could take it to the long side here. Still not perfect, but you could take it to the long side. However, the stop loss should be this level. You can take it to the long side right there and put your stop loss at a new 1 minute low. That's so tight. It's still in the range. This is the range we have right now. So or at least this could be a range we have right now, like one of those two, depending on how you look at it. So yeah, this was a really tight stop loss. Good entry, tight stop loss should have worked out for you. Now you are getting the W shape right there. Going up, dropping down, higher low wave, another higher low wave. This is a higher low wave, this is a new higher low wave. And this was a good entry, I like it. So this was perfect. This I wouldn't have taken it. This is not bad, a really tight stop loss. This was perfect one, I like it. On the 5 minute chart, it was also enough clear right there. And a little bit of early partials. This partial, I wouldn't say anything about it. Not bad because it was closer to the high of the day. But then it breaks the high of the day. And you could have just held it or left 5% or 10% for your position to run because you had a really good entry here. Low, huge pullback, wait for the double bottom. Yeah, I like that low as well. After this huge pullback, right here, we should wait for a double bottom, which happened actually here. This would have been also perfect entry right there. I was in that trade and got subbed out and it tripped. Were you long here and get subbed out, Marlon? Oh, on the SPY. Yeah, we'll get definitely back to the SPY. So, this is another trade for Lenny. Was this a long or a short, Lenny? I'm not sure what this trade was. I can't see Lenny here, but let's talk about both. If this was a long, assuming that this was a strong move and it's holding the daily level right here, I wouldn't really like it. First of all, you have 1, 2, 3, 4 consecutive green candles, and I usually don't take stock even on the third consecutive green candle. So it's already extended, and after these type of moves, I usually wait for pullbacks. That's the first reason why I wouldn't take it to the long side. The second thing, I don't love taking stuff as a trend continuation around daily levels. I would take them for the breakout of the daily level. I would take reversals against the daily level, but I will not take it to the long side as trend continuation of a daily level. That's not something I usually do. The short here, it wasn't so bad. It could have, you could see it's going up, extended from the 9 and the 5, enough extended, no pullbacks here, no new lows on the 2 minute chart. This is the first new 2 minute low at which you could take it to the short side and put your stop loss at the high of the candle, and then it does work out. If you get stopped out, I think on the short side, I think this was a really tight stop loss. And I wouldn't have had that tight of a stop loss right there. At least the high of the buy or around the week, I could have got stopped out right there. But I'm not sure I would have actually, because this is a small candle. Having 20 cents on MRNA, 30 cents on MRNA is enough for a stop loss. Having a stop loss tighter than 10 cents or 15 cents on MRNA, that's a little bit risky because it moves a lot. You're welcome, Ayush. This is a trade for Ethan, and we went through this trade. I'll not go through it in detail. Dropped down a lot, pulled back to view up, sort of a descending triangle on the 1 minute chart inside a reverse ABCD pattern. Oh, this is not an ABCD pattern. This is actually 5 minute open range breakdown. Yeah, I could say that this was a 5 minute open range breakdown with a reverse ABCD on the 1 minute chart. Some might say, why is this a 5 minute open range breakdown? He took it at 9:59 and he took it when it was way farther from the range. Didn't take it to the short side here, he took it to the short side here. If you take the candle between 9:35 and 9:40, this is still 5 minute open range breakdown, even if you take it on the 9:40 candle. Was it good if you took it to the short side right here, right at the break of the 5 minute candle? It would have been somewhere right here if he did that. If he takes to the long side right at the break of the body, it would have been somewhere right here, and that's not a good entry. It's coming back up, no new lows. You would be just gambling. Yes, it's a 5 minute open range breakdown on the 5 minute chart, but on the 1 minute chart, it's not a good setup. Now that you're seeing a good setup on the 1 minute chart, sort of a descending triangle on a reverse ABCD pattern with a 5 minute open range breakdown on the 5 minute chart, that's a good setup there. So you would have taken this trade. You should have taken this trade so far from the 9 on the 5 minute chart. I actually taken this trade to the long side. Let me show you my trade on MRNA. You see my trade on MRNA right here? I took it to the long side when it was extended from the 9 moving average on the 5 minute chart and the 20. So look at this. At the open, it started selling off. It dropped down all the way to the 20 moving average in the 15 minute chart, which it held at the pre-market. The drop was fast. I saw that the drop with a steady speed. It wasn't dropping, pulling back, dropping, pulling back. It was in a fast with a steady speed. The next candle, it started dropping down and it held this level really well. It stalled for enough decent amount of time. So around the 53 round number, starting to stall on a parabolic drop. Look at this $3 stop loss with no pullbacks. Took it to the long side and started partialing at my risk to rewards. Why did I exit all at view up? Because this thing wasn't strong. It wasn't a reversal. I took it for the pullback. Huge drop, and I knew that it will do a pullback before dropping down. Why did I exit the last of my position right here, right at the top? Again, it was going up with a steady speed. It looked strong all the way here. Even here, it looked decent for long. But right here, it started selling off. Every time it gets into this level, it's starting to get sold off. That was a weak sign, and I bailed there. Then after that, it started forming a reverse ABCD pattern right here. So look at this. This was the pullback. Right here, this was the pullback. Why would I take it to the short side here when it's extended from the 9 moving average on the 5 minute chart? Because it already did the pullback. If it was dropping right here, and that descending triangle was forming here, right here, after the drop, I wouldn't have taken it to the long side because it is extended from the 9 moving average on the 5 minute chart, and there was no pullback yet, and I would expect a pullback. Maybe it drops down, but usually after these kind of drops, it just does fake breakouts, small drop after the break, and then it comes back. So yeah, it was extended from the 9 moving average in the 5 minute chart when he took it to the short side, but it already did the pullback. That was smart, Lou. Remember what we usually say? First time the stock gets into a moving average, it bounces out of it. The second time it gets into it, most likely it's going to break it. So taking it to the short side here against the moving average, yes, that's a bad idea because this is the first time it gets into the moving average. Taking it for the break of the moving average when it gets into it the second time for the break, that's a good idea. It's not bad. So you don't need to wait for the break because it will be so late after that. Was it clear? I hope it was. So PTON, this was Lenny's trade on PTON. You took it to the long side. Look at this. Where did you take it to the long side? Remember my rule on parabolic reversals I shared with you guys? when the stock is dropping down, even if it does a new 2-minute high, if it's doing that into a horizontal moving average on the 5-minute chart, on the 1-minute chart, on the 2-minute chart, I don't take it. Yes, it's a parabolic reversal. You have a new 2-minute chart, but you're going into a horizontal moving average. That's why in this case, I wouldn't have taken this one. Would I have taken it here? This looks better. And why is this looking better, even though it's going against the horizontal moving average? There are two reasons. New 2-minute high. It's a good reason we had a new 2-minute high here, but there are actually other reasons. You have a daily level as support, okay. Wide bar, inside it a small bar, that's the confirmation. Let me zoom it in more for you guys to notice. Look at this. What do we have? A bounce fill level, a harami candle, bullish harami candle, okay. A double bottom, and yes, but what happened? Look at this. False break, exactly. False breakout, that's the first reason. And the second reason, this candle is so small, as J-Bone said. So look at this. It dropped down, closed as a hammer, pulled back, did sort of reversibility pattern on a smaller time frame. It broke down, but it wasn't weak to continue selling off. It immediately got back into the range, closed with a small candle where you could actually take it to the long side. That's the first thing. The second thing, in this case, if you take it to the long side right here with this type of stop loss, look at this, this is your entry, this is your stop loss. The 200 on the 5-minute chart is somewhere right here. You'll have at least 2-to-1 risk to reward right there. Here you get in literally into the face of the horizontal moving average. The risk to reward isn't there, and there are no enough confirmation. Here it did a fake breakdown, which is an extra confirmation, and I love this extra confirmation with these type of setups. Plus the risk to reward, even if it doesn't reach the 9 moving average on the 5-minute chart, and it did actually reach it, the risk to reward is there. Yellow, exactly. I feel like you are reading my mind sometimes. So, Peter, let's see what you didn't save. Peter, so you took it to the short side, right? Yeah, it was a short, I see. What was the reason you took it to the short side? So descending triangle, I see the descending triangle you mean. Let me actually zoom this thing out. You saw this descending triangle right there, right? Descending triangle with selling pressure with the 9 moving average bounce. Okay, I see that. So look at this. It did drop. One thing I wouldn't have liked is this huge drop, but this is still good. Why is that? You have an engulfing candle. When you have an engulfing candle, you could go for an engulfing crack setup. For those who are not familiar with this setup, what's an engulfing crack setup? You're having first candle, which is bullish. Then you're having second candle, which totally engulfs it. Then the third candle cracks the support of the previous candles, and then you take it to the short side. This is the bearish engulfing crack, or a bullish engulfing crack, doing the opposite thing. First, then second long, then it cracks to the long side. So you have the setup right here, a bearish engulfing crack. One thing I don't like is that it didn't close after it engulfed. It continued going lower. So the crack already happened, or the break already happened. So it wasn't the perfect setup, but it was still looking decent. Then you're having a descending triangle, and I like that. But look what happened there. What happened here? You see this? It did break the descending triangle, right? Right in this minute, this was the entry on the short side, and this was the descending triangle where it broke down. Once it broke the descending triangle, it should have actually continued selling off or going to the downside. But what this actually was is a fake breakdown. It broke the range. If it's strong, it will pull back and it will get back all the way to the range, before the range, or maybe break it a little bit back up. But you see, it broke down and immediately got both back up. Fake breakdown, closed as a hammer, where you actually took it to the long side. For a descending triangle, you get in three possible entries. First one, you get in right for the breakdown if the risk to reward is there. You get in as close as possible for the support to the resistance area in this case, or you get in for the breakout, because most of the time when descending triangle works out, it gets volume and it sells off. If you missed all of those and you really feel that this thing is so weak and it's going to continue selling off, you could wait for a consolidation after the breakout, and that consolidation or pullback should be into the previous support area. You see it going here, it's holding this support area, it's continuing to holding this support area, then you could take it to the short side. Once it gets back into the range, that's where you actually avoid the trade. Yeah, exactly, and this hammer could have been actually good also indicator that this thing might actually pull back. Hello, Robin. Mark, let's see what you did. Set up a break of the pre-market high. So look at these guys, you're having a pre-market level right here. This area right here is the pre-market level. You took it for the break of the pre-market high with hold of the pre-market level on the 1 minute chart. So yeah, this one was decent. Look at these guys. At the open, it breaks the pre-market high level. Maybe you missed this entry right here. On the next candle, it gets engulfed and it sells off, plus it gets back slightly into the range. But look at this, it's not continuing to get sold off when it gets into the range. It immediately gets bought back up and it closes above the range area. Next candle, starting to form the bearish engulfing sandwich right here. It's not formed yet, so you could have taken it at the long right here when it broke down. But looking at it holding the pre-market area, opening up so strong after a pullback, this was actually a good entry right here for the break. And I've taken a similar setup. Let me show you right there on MRNA, but it was in the pre-market. I rarely trade the pre-markets, guys, but I do that when there is enough decent. And MRNA was trading at 4 million shares in the pre-market. Let me zoom this thing here and let me zoom this thing here. So look at this, what happened to the MRNA? Let me just zoom this right there and zoom out this right there. You could see that it's strong. Basically, it's making slightly higher highs. It's holding some sort of level. It's looking strong here. On the 5 minute chart, it sold off, broke this area right here, but wasn't weak enough to get sold off, got bought back up and started forming a 3-bar setup on the 5 minute chart. On the 1 minute chart, went up. Look at this, it has this small range on the 2 minute chart, but what happened? It broke it. It did a fake breakdown right there. You see, it did this fake breakdown and then it immediately squeezed back up. So this was a good entry, but unfortunately I was slow enough, I missed this entry and I saw it going up without me. So look at this, what do we have now? We have this range right here. You see, this is one way or similar to the trade you have taken, Peter. You missed the first entry, right? You missed the breakout entry and you wanted to get in on the next pullback, right? What did I wait for in this candle? I waited to see that the pullback is going to hold the previous resistance area. You could see that it dropped down here, but I didn't take it to the long side when it dropped all the way down here. I wanted to see, is it going to continue selling off and get back into the range? If it does that, it means it's weak and it might actually drop down. If it gets bought back up or holds this area right here, the previous resistance area, then maybe it's still strong and it's worth getting in on the pullback, which I did. I took it to the long side. What was my stop loss? My stop loss was this area. I don't put my stop losses at the fake breakouts level, at the wicks which make the fake breakouts. I put it at the closest support I have before the fake breakout, and then I started partialing on the way up. This was my first partial, which was only 20% because I believe that it's still strong and I have room all the way to 59. But then look at this, it is extended from the 9 moving average on the 5 minute chart. It's going parabolically, it's getting an increasing volume and it's doing a new 2 minute low. This is a parabolic reversal. since I saw this is a setup where I usually take it to the short side, I decided to take 60% of my position left and the rest closer to break even. I got some slippage, but yeah, that was it. No, I don't really care about volume. And by the way, when you have low volume on pullbacks, that's actually a good sign. You want a good volume going with your direction. So on your direction to the upside, you have increasing volume. On pullbacks, you want to have low volume. So this is actually even a good sign, which I didn't pay attention to. Okay, perfect. Now let's see J-Bones trade. And then we have Drew. J-Bone setup, parabolic reversal. I see it there. I love that you've taken it. I swear I was watching this setup, but I couldn't just pull the trigger. I have no idea why I didn't pull the trigger. And by the way, not only PTON. I missed PTON, BA, and I think there was one third stock. I'll show you. They all happened at the same time. 3 setups. I hesitated to take, and all of those 3 setups actually worked out. That was enough sad. So look at these guys. PTON dropping down parabolically, extended from the 9 moving average on the 5-minute chart. There is the 9 moving average on the 5-minute chart. It's getting closer to the 200 moving average on the 5-minute chart. Extended from the 9. And look at this. Also, he saw this support on the 5-minute chart. Climactic volume. You see this is increasing volume. Not so much, but yeah, this is enough decent volume. Entry, wide bar followed by a small bar on the 2-minute chart. So look at this. On the 2-minute chart, a wide bar candle followed by a small bar candle inside it, where he took it on the new high. Stop $41, intended 3 to 1, and you got a 3 to 1 minus 1 hour where you actually get stopped out, so you got eventually 2 hours. So look at these guys. Let's zoom it in. First of all, he took it to the long side. He didn't put his stop loss at the low of this small consolidation. Tightened his stop loss, just gave it some room, and because of that, he got stopped out. Then he realized that it's still not weak enough. It's still not going against him. The setup is still valid. It's just the stop loss didn't work out in his favor. Re-entered again, and he actually held it to his target, which is 3 hours, which is close enough to the 9 moving average in the 5-minute chart. Usually in parabolic reversals, I would hold at least 20% or 10% of my position in case it's going straight up. If it starts holding like this, and I'm not really sure it's going to continue going in my favor, I might bail out on this. But other than that, it's really good how you managed it. 2 trades, 1 loser, 1 winner, but still up through 2 hours. Hey man, if the volume is low, does it typically mean people are taking profit and it's not reversal? It depends on the whole. Volume is just a small indicator, like moving averages, like similar to the candles, similar to the level 2. It's just an indicator. It could be there and it could not be there. Sometimes it could be right and it might not be right on other times, right? But what I love to see is, for a perfect setup, an A+ setup, an uptrend with an increasing volume, a clear pullback to some support area with a decreasing volume, a breakout with an increasing volume. Why do I love this low volume right here? It shows me that on this pullback, it's people who are long are just taking partials, taking profits. There is no pressure from sellers to push the price down. If the volume is the same as the uptrend or even higher, it's showing you that there is profit taking plus there is short people getting into short positions. You're welcome. Now let's see what Drew did. Drew, you traded PTON, and was this a short? I think this was a short. It was a short and then partial, and then there are many partials up there. So I wouldn't have taken this thing to the short side unless I went in for the momentum and for a scalp, but even with that, I wouldn't have done that. Why is that? Look at this. This is a huge move there. This is a huge drop, right? you are taking it to the short side after it dropped $1.20. And what's the stop loss in this case? I mean, you could take it to the short side here for momentum and just have a tight stop loss if you wish, but I would expect it to go at least closer to the high and then continue dropping down. And if I take it to the short side here, this is a huge stop loss considering that we have a pre-market low here and also a daily level on the way. So the risk to reward isn't really there. For momentum, if you are really fast and you could execute it with tight stop loss and you see something on the level 2, that could be a decent entry with a target the daily level which you held, and I like that you held right there. But other than that, I don't think I would have taken this thing, but I like how you managed it. This here though is not the best. I think you could have just exited all at break even. Once you saw it coming back, bouncing off a daily level right there, just exit all at break even. No need to take partials when it's going against you. You take partials when it's going in your direction, but when it's going against you, you are just paying for the loser. You are getting some slippage, plus you are getting some commissions. Okay, good. Now let's see Valentin, and then we have Daniel. Perfect. So Valentin traded MRNA. This is similar, and we've talked about this. Drop down on the 5-minute chart. This is just same setup on bigger time frame. You have an M shape right there. You have a descending triangle right there. You get in for the breakout partial at the daily level, which was smart. It held the breakout area, so the previous support was acting as a resistance right there. You could see that the previous support at the blue line acted as a resistance, which was the reason for you to add. That was still smart. I like this add right there. And then you took a partial closer to the low of the day, the rest at break even. So yeah, this was perfect. Descending triangle, get in for the breakout. It did break down right there. Did break down. You didn't take any partials. It pulled back. You notice that it's holding the previous support as a resistance, made a new 1-minute low where you added to your position, and then you took the partial. This was good, but unfortunately it didn't work out as much as expected, but still, this was a good setup. I like this one. Daniel traded PTON, 5-minute opening range breakdown, early partials though, right? Look at this. It dropped below view up, pulled back to view up, it closed below view up, it is close to view up, which is good. You took it to the short side, but that was early partial. And look at this. It's forming, you could say, the bullish engulfing sandwich right there. You get into the short side, put your stop loss right there, but again, you get stopped out. And look at this, again, short and stop. That's really tight stop losses here. The first case, if you take it to the short side, that would be my stop loss, and I wouldn't really partial unless I hit the 2 to 1. This second trade right here, it did the breakout. It broke to the long side, but it's not strong enough. Bounced off the 9 on the 5, started going down, did a bear flag setup or reverse ABCD pattern, whatever you want to see, you are seeing right there. All are trend continuation setups. You take it to the short side. On the 5-minute chart, this should be the stop loss at least. Here, I wouldn't have taken it to the short side because it wicked up right here. It wasn't weak enough. So this showed you some buying pressure of a daily level, and you're getting into the short side when it's enough extended from the 9 on the 5 and literally into the daily level. Then I assume you took it to the long side and you got stopped out. And I wouldn't also have taken it to the long side right here. I don't see the 1-minute chart actually, which is bad, but if I saw it, I would tell, so I can't tell exactly from here. This long here went up, pulled back, bounced off the 50 moving average, came back to the long side. This was good, and I think this, no, this wouldn't be the lightning bolt of Peter, right, Peter? Peter, are you there? Would the entry for the lightning bolt be here for you, or this here? Would you even trade it? Not lightning bolt, thank you. So look at this, guys. Went up. This is not a lightning bolt, but I still like this setup right there. It dropped down. Look at this. Where did it pull back? Just pay attention to this. It pulled back to the previous resistance area. If you can take the budgies right there, not the wicks. the bites right there. The pullback right here was into the previous resistance area. The resistance became support, then it bounced. This would have been a good entry right there. This is not a bad entry right here, and then you are taking partials, the rest break even. So this was good. I like this one. This to the short side was also not bad. It's dropping down, and look at this. Now when it's dropping down, this previous support isn't acting as support. It's actually breaking it. It's pulling back to the 50 moving average again. So you see, the 50 moving average here acted as support. The 50 moving average acted here as the resistance. You take it to the short side, tight stop loss, partial at the daily level, rest at break even. Did the same thing here, sort of descending triangle. Now here I wouldn't have taken it to the short side. Why is that? It did actually form a double bottom with the second bottom higher than the first one, a higher low wave. So once it broke this right here, it should have just sold off to the next pivot area right here, but it wasn't weak enough. It held this level and it started squeezing back up, and I would have expected this to happen, to continue doing higher low waves until the breakout happens. So yeah, this entry right here, this trade right here, it was really good. This trade right here, I like it so much. Here you had really tight stop losses, and this is not necessary in my opinion. Daniel, let's see what you did on AMD. So look at AMD here. What do we have? A lower high waves. It's a little bit choppy. Yes, it's dropping back down. It's coming back up. If I wanted to take this thing to the long side, I think I would have taken it somewhere right here at 11:30, somewhere right here. But I'm not sure even I would have taken this here because of this moving average. Why is that? Usually when they break the moving average, the 50, they pull back to the 50, resist it, and then they continue dropping down. So I don't think I would have taken it to the long side against the 50 moving average. Then I see this here, it breaks the 50 moving average, it pulls back, comes back for the break. If I'm really long bias and I want to take this thing to the long side, I wouldn't wait for it to break this area right here. Just get in earlier. Why earlier? To have a tight stop loss. If it breaks and it decides to go at least to one of the previous pivots right there, at least I will have a good risk to reward. Getting into the long side here means that your stop loss should be here. I mean, at least here if you just decide to tighten, which you actually did. You had this stop loss. So look, the risk to reward is actually messed up. Now, with an entry here, you are getting long into the next pivot point right here, and then into this pivot point right here, which is not just giving you a good risk to reward. Your Disney trade, let's see what was there. So look at this, it went up, I see this, into the daily level right there, dropped back down, and again, you take it to the long side, and I know why you took it to the long side. I think you traded based on the 5-minute chart. You saw that it was holding this 20 moving average, and you decided to take it to the long side with the stop loss, the break of those levels right here, or those candles right there. Why wouldn't I have taken this to the long side? And guys, if you are looking at this, tell me your opinion. What would you have done in this case? Would you take it to the long side? Would you wait for an extra confirmation, or descending triangle? It is bearish. Anything else? Inverted head and shoulders. Okay, see that? So look at this. It's going up, it's uptrending, and I like that. Around here, it's still strong. Around here, it does a pullback to the 9-moving average in the 5-minute chart. It does the first leg up, it breaks, and it does a decent trend. Now we are having a shooting star at the high of the day with slightly increasing volume. It tries to break up again, but it fails. Tries to break up one more time, and it does that finally with a few cents. Fake breakout. Now it's dropping down, and it tries to break one more time. This is it here. It's trying to break one more time, breaking the moving average cross. The cross is a reversal pattern. It's trying to go up, but it fails to push back to the long side, and you're having sort of reverse hammer or right here. and it drops, making lower highs right there. Now you're having the 50 moving average on the way. And remember what I said, usually on a setup switch you have a new 5-minute low, new 15-minute low, cross of the 50 moving average with the 9 and the 20. Stocks usually pull back to the 50 moving average, reject it, and if they do, that's a good entry to take it to the short side and wait for the break. I wouldn't really take it to the long side against the 50 moving average right here after I see all those indicators right here, indicators of reversal. The risk to reward isn't there. Let's see what guys said. Take it after the doji at 11:15. 11:15. Did you take it down there? Until the 1 minute and the 5 minute are all in the same direction. Enzo would have taken this to the long side once the 5-minute chart, once it did in your 5-minute chart. Shlomo, for me, it's nothing to do. Yeah, I would have done nothing here as well. I would have waited for it to either break above the 50 moving average, pull back, and then take it to the long side. Or if I'm short bias and the SPY shows you some weakness, I would have waited for this pullback right here and took it to the short side right there, holding it. Around this area, I don't think I would have done anything. Skyfast, let's see what you did. Skyfast, is this the first time you're sharing trades with us? Yes, it is. Are you trading simulator or live? Probably an example of not to do. Let's see that. It's live in Thinkorswim. How long have you been trading? Two months live on in simulator. How long you were in simulator? Or you didn't trade simulator and started directly from live? Let me get the yellow pen. One sim, one live. I know it's not a recommended plan, but I'm trying to maximize learning before I go back to work. No, that's smart. I mean, if you have the capital to survive the learning curve, it's good, and it's always good to get the taste of trading live, to get the psychology behind trading live. So if you could afford it and you are not risking a lot, you are realizing that you are doing this for the sake of learning, then that's totally fine. So let's see what you did there. You took it to the short side, I assume. Was this short at 43.92? Somewhere right here. Okay, first two were short. So you took it to the short side at 42.92 for 1. This is a 5-minute candle. For a 5-minute open range breakdown when it was close to view up, which is good. And we actually reviewed a trade similar to this. I'm not sure what was your entry on the 1-minute chart, but remember guys, when it dropped down and started forming a descending triangle on the 1-minute chart, and we are getting in for a 5-minute open range breakdown right there. So this was good. Then you took partial at 44.29. You added to your shorter, you re-shorted it again at 43.31, somewhere right here, right? Now this short right here at 43.31, I wouldn't have taken it. Why is that? 1, 2, 3. Third red continuous candle. I'm not sure what happened there on the 1-minute chart, but I don't usually go in the third continuous red or green candles because this is already extended. It already did the move. What I would wait for is wait for a pullback. What I would do is wait for a pullback and then take it to the short side somewhere here or somewhere there. Now let's see what you did there. This I assume was a long at 42.35. Wow, did you get your long right here? What made you take it to the long side right there? With the 200, oh, okay, I see the 200 moving average. Okay, I see that. Did you wait for a new 1-minute high or something like that? Watching the 1-minute chart. Okay, remember guys what we saw there? Candle, another engulfing candle. Then we had like 3 hammers on the 1-minute chart. I remember this because I unfortunately missed this one. But okay, looking at the 1 minute chart, you saw this and you bought it down there, listening to the chat room. Okay, so I'm not sure, was it Brian or Andrew who called that reversal? I didn't listen for it at that time. Maybe someone typed it. Okay, that doesn't really matter. So you took it to the long side. This is not a bad long right here. And you held it all the way to 42.64. That's actually good patience. I like that. Like getting that good of an entry with that tight of a stop loss and going for this reward with this risk, that's amazing. I love that. Well done there. Another partial there. And I assume this was a long. You panicked there. 43.72. 78, and you just exited after 6 cents profit. You didn't like that entry, right? No, this was, yeah. I assume you didn't like the entry. Yeah, because the entry here, it was just late. Look at this. 1, 2, 3, 4 consecutive green candles. Yes, it broke down right there, but this is not enough. It's close to support area. You got in so late. You got in into the resistance after it made a huge move. This is a little bit late right there, and you decided to bail on it. So look at this. Even your confidence, you know when to hold and when to actually bail. This was a good entry, closer to the support. It was going into your direction, and you knew you don't have any resistance ahead. You could just hold it all the way to the 9 and the 5, let's assume. And you did that. Here you got in bad entry, and here you got in bad entry. This was a chase here, and this was a chase here. And both of those trades, you realized that the entry is bad and there is no reason to hold, and that's why you actually bailed on them. I like that decision making, and it's good to just avoid trading the stock when it's just going without you. Just wait for pullbacks, wait for setup, and only then trade them. Question: can I go straight live without doing simulator if I keep my position small? I want to know or learn how to control my emotions, which isn't important as knowing my entry rules, and I'm afraid that Sim doesn't provide that. So Blue, first of all, when you are going to simulator, you have a few goals from that. One, you need to get used to the platform. You can't go live without getting used to the hotkeys, without testing them a few times, without finding out the proper setups you like, without knowing what the platform is or what it's doing. So the first thing you need to do is to get used to the platform when you are in simulator. The second thing, you need to find your edge or your niche. What setup actually suits you, what setup suits your personality. And the first month in simulator, I think you will be trading everything. You will be trading feelings, you will be trading reversals, ABCD patterns, breakouts, flags. You will be trading everything. That's not bad, but you will get the feel of what you like more. Once you get that, then you should adjust the setups you like. Let's say you like trend continuation or you like reversals, then just start trading those reversals only and start adjusting them. Make some rules for them. Once you get used to your rules and to your setups, once you get used to the technical aspect of trading, then you could go live to test the psychological aspect of trading. You could go directly live, but remember, it will be costly. Simulator is $100 per month. If you get it from BBT, Dash Trader, 3 months for $300 instead of getting it for $150 from DashTrader.com, and it will be $1 risk for the whole month for the sake of learning. If you go live, even with a small risk per trade, even if you are risking $5 per trade, if you lose 3 trades a day, it's $15. If you lose 5 days or let's say 6 days, it's almost $90, which is the cost of simulator in 6 days losers, right? And that's almost 1 week. I mean, 1 week and 1 day. Once you start, or with the time you go live, even if you just go live directly, don't expect to make money. I would say it's 99% impossible to make money directly going live without practicing beforehand. So I definitely recommend you first go to simulator at least for 1 month. But to be honest, I've never seen anyone consistent from the guys I talk to, from the ones I've traded with. I've never seen anyone who is consistent trading without trading at least 3 months in simulator, and that's the least thing. I mean, I was long in this trade from 536 to 546. I'll check that trade. Yes, Marlon, it will be available on YouTube, and all the previous trades are also available on YouTube. So guys, let's take a look at Skyfast trade, then Ralam and RNA, and that will be it because we have only 6 minutes left. And let's check this. So yeah, we actually reviewed this one. So let's see what you did here, Ralam. You traded Teva, and let's see that. Let me zoom this thing out. So look at this. You have some sort of chop right here. This is the 1 minute chart. Yeah, this is the 1 minute chart. This is the 2 minute chart, and this is the 5 minute chart. What trading platform is this, or it's charting tool? No, it's not charting tool. Anyway, let's see what happened there. You see there is buying pressure here. Buying pressure here. You are getting some sort of engulfing here, but again you are getting into buying pressure. So you entered when the 1 minute chart, 2 minute chart, and the 5 minute chart were all at green. 1167. That was your entry right here, right? 1167 right here. It was a new 1 minute high, and it was a new 2 minute high. So I like that. Looking at this, you have a support area right here. It held this support at the open. It held this support a few times there. You are having more buying pressure than selling pressure. You are getting in closer to the support. I wouldn't have taken this trade, to be honest, to the long side, because I'm not sure where the 9 moving average right there, but it looks choppy for me. It's stuck in a range. That's what I see. But what I like about what you did right there is that you got into the long side closer to the support. You could always trade the range. It's just me, I don't trade the range a lot. It's not my style, but there are people who are trading the range. And if you want to trade the range, you should trade it similar to this. You should get in as close as possible to the support and sell in at profits, or as close as possible to the resistance. Here we had fake breakdown. That was it, a fake breakdown, and I love trading fake breakdowns. People who are long usually get stopped out. You get an increasing volume because if people are getting stopped out, then it's doing a higher low wave with a confirmation to take it to the long side, and that's it right there. You saw it was kept bouncing of the 9 moving average, and you went into the long side. So yeah, this was a good one. This I wouldn't have taken it to the long side. Yes, it's bouncing of viewer, but look what's happening now. You had this range right here, and it did break out. This was a fake breakout to the long side. Then a huge drop, lower high wave, lower high wave. This is weak. This is not strong anymore. Yes, it's above view up, but it's not that strong. Looking at this, looking at the 5 minute chart, it's making lower highs and lower lows. I would have just avoided this trade to the long side. RNA, let's see what you saw there. First trade was short, parabolic pullback after the 2 dojis on the 1 minute chart. So first trade, you took it to the short side here after those 2 dojis because it was parabolic, and the target was the 9 moving average in the 5 minute chart. Okay, I like this one. To be honest, I like this entry right here more. And why do I like this one? And again, this was TWLO. This is another trade which I saw similar to PTO and TWLO and BA. All those 3 stocks, they did parabolic reversals at the same time. Unfortunately, I missed all those 3 trades. My psychology get messed up, and I didn't take any trades after MRNA because of those 3 stocks. So look at these guys. I like this. It was making higher highs and higher lows all the way, higher highs and higher lows. Then it's doing an engulfing candle or 2 dojis at the high of the day. And I liked it to the short side here on the new 1 minute candle right here, but still was a little bit hesitant. Then it did this candle, a new 1 minute high. It looked ugly, definitely. Look at this volume spike right here. This volume spike right here, it's going up to the long side, making a fake breakout, immediately getting back into the range. That was the perfect entry to the short side. Unfortunately, I missed this one. Then it's dropping down, sort of reverse ABCD pattern while it's still extended from the 9 and the 5 minute chart. That's where RNA took it to the short side. That was his stop loss, and those were the partials. So yeah, that was a good target right there. Second trade, let's see what you did there in the second trade. Was a long ABCD pattern, got subbed out at the break even after the first partial, and you could not enter it again as the 1 minute chart was a mess. So let's see what you had there. Sorry about this. This is a good one. I like it. So it was bullish. Dropped down and it started making higher low waves. It broke down here. This is a fake breakdown. And again, I love those fake breakdowns. So it did a fake breakdown and it immediately got bought back up, forming a new 1 minute high. This was a good entry. Even if you take this one, this was a perfect entry right here once it broke above the 50 moving average. Then it did this here, held the 50 moving average, sort of 3-bar play. Not the perfect 3-bar play, but this is not bad right there. You took it to the long side for the break. This would have been enough of a stop loss right below this range, which it held, and you partial on the long side, exited the rest at break even. And yeah, after that it didn't actually give a lot of confirmation. This wouldn't have been bad entry. Why is that? Look at this. Dropping down, holding the moving average, dropping or breaking the moving average, but it's not weak to get sold off. Look at the volume. Once it broke down, it started getting bought back up with an increasing volume, and this would have been a good entry right there. Other than that, there is no entry. If you miss this entry here, you are missing the move. There is no chance to enter at any of those candles right there. Okay, Sam, I'll take a look at the last one. And guys, this is the last trade for today. Let's take a look at this one because we are running out of time. SQ, let's see what he did there. This one I like as well. You're having the 5 minute chart buying pressure, a few dojis, and you're also having selling pressure on the top. So it's not ready right here. You are not sure what it's going to do. This candle showing you more buying pressure than selling pressure. Weak on the bottom, plus close on the upside. Ascending triangle, 3 touches. I see them, 1, 2, 3. You take it to the long side. Then look at this, guys. Once it broke up, it pulls back into the previous resistance area, acts as support. You could add here, similar to what he did. This was an early partial, like you got in literally at the breakout on a strong stop. And look at this, it pulls back again to the previous resistance area where you actually took it to the long side. With those good entries, it would have been better to just hold a little bit, at least to the daily level, or for a good risk to reward. So your entries and your analysis were right and were really good, but the partials were a little bit early, I think. Let's take a look what BTG is doing right there. Okay, that's bad. BTG. Wait, are you looking at this now? Vinny? The volume is 5 million shares. It is not extended from the 9 and the 5. I wouldn't really trade this into any direction. To be honest, it's looking more long than weak. I like that. It's looking like it's breaking out right here. But look at this. These 1 minute candles, they look more like algo trading to me. Like, they are ugly. I don't like the 1 minute candles. I don't like the 2 minute candles. It has already moved a lot. Look at this on the daily. If you just buy the look of it, check out how much it moved today. It moved around the average true range on the daily chart. So it could be toppy. It could break out, and there it is. It broke out now. But does that mean I like it for a long now? Not really, because it could just go to 1563, 1564, fake breakout, and then drop back down. Or it could just drop all the way to 560 or 559 and then continue going higher. It's just not clear around here. So yeah, that's it for today, guys. If you have any questions, feel free to ask me here or in the chat room. Thank you for sharing your trades with us. Trade safe. Make sure not to trade past your max loss. And Momo volume, it's just an indicator. It is important. It's good to see volume confirmation, but it could be there sometimes. It could not be there. I don't really pay so much attention to it. Do you see what I meant for that new scanner for Parabolic? Seems like a little too restrictive now. Yeah, I did see that done. I think we might add both. We'll see that. I'll discuss it with Peter after. Or maybe I'll see what I can do about that scanner for it to make more calls. So have a great day, everyone, and thank you again.